Hello and welcome back to the Pension Confident Podcast. Now, you have probably heard of the gender pay gap, and you may have heard us talk on this podcast about the gender pension gap. But did you know there is also a gender investment gap? Now, there could be many reasons why you don't invest. Worries about risk, maybe feeling you just don't know enough about investments. But the data tells us that gender can be a really big factor too. Fact is, fewer than half of women invest in the stock market, compared to 66% of men. Now, investment website Boring Money reckons that adds up to nearly £600 billion worldwide, more in men's investment accounts than in women's. You heard that right, 600 billion. So why can women feel reluctant to invest? Is it about financial confidence, historical inequality, or is it something else? Well, today we're joined by a panel of experts who have all thought very hard about that.
Inequality starts so early. It's very well documented that little girls get less pocket money and parents are more likely to talk to their boys about how to build wealth and girls to saving.
It's more a case of women wanting to have more information. And I say men sometimes would potentially have less information and still sort of jump in.
Yeah. There's also what I will put in the category of value proposition. I don't know whether I'm going to make the money, I might lose it, but is that value for me? I should be risking it.
Ayesha Ofori is the founder and CEO of Propelle, a financial education and investment platform that specifically caters to female investors. Hi, Ayesha.
Hi, thanks for having me.
Next, we have Anna-Sophie Hartvigsen. She is co-founder of Female Invest, a financial education platform that aims to close that financial gap between men and women. Hi, Anna.
Hi, happy to be here.
And from PensionBee, here's independent non-executive director Lara Oyesanya, who, as well as being a barrister of the Supreme Court of Nigeria, she's also a solicitor here in England. Very useful for us as she has plenty of senior leadership experience across various FTSE 100 and financial services companies. She's going to share some of that experience with us today. Lovely to have you with us, Lara.
Hello.
Now, as usual, before we start, do remember anything discussed on the podcast should not be regarded as financial or legal advice. And when investing, your capital is at risk. Should we talk about that investment gap, that 600 billion number that I mentioned? We're talking about ISAs, private pensions, other investment accounts here. That's from this Boring Money report last year. Were you all surprised by that number?
No, unfortunately.
No?
No. Spent a lot of time sort of researching this. And that's one of the reasons that I set up Propelle to try and address this issue. So unfortunately, not surprised.
I think most people don't know that, though. Most women don't know that.
I think that's absolutely right. Although it's not a surprise, it's still a huge number. When you have it that stark, you stop to think, that really?
I mean, I would say it's probably worth asking at this point, does it matter if women don't invest, Anna?
It hugely matters. Money is not just for buying things and having fun. Money equals freedom, power, independence, the ability to make the big decisions in life yourself, rather than having them dictated by your bank account. So when women are falling financially behind, it ultimately means that we have fewer options in life.
And that's why we're talking about it today.
I couldn't agree more. I could not agree more. And can I just add to that by saying that it just limits your options. You have less choices, if you don't have that ability to make the same sort of investment decisions as men do.
And when you look at the history of women and money, it is not hard to see why we might still be thinking that money is men's business. It was 1922, only 1922, that women in England won the right to inherit property. Before that, they had to give up all their property rights if they got married. It's amazing, isn't it?
Absolutely, and that's not all. I mean, the Equal Pay Act didn't come out until 1970. That was all about making sure that women were paid the same as men for doing the same role. And, one could argue that, the gender pay gap still exists, so has it really solved anything?
And then even after that, it took another 5 years before women were allowed to have their own bank account, before they were allowed to have a credit card for themselves. So that was 1975, which is just hard to believe.
It is. And this was the one that really amazed me. Women were only taxed independently of their husbands in 1990.
Yes, indeed. And I do have a personal experience of that. I think it was 93, 95, thereabouts. I'm trying to get some money off my bank and it's like, we'd need your husband's consent, to proceed. And I'm thinking as a professional woman in my own right, having been a barrister, practicing solicitor, I still need my husband's position to manage my own financial advice, financial affairs. It's just like, no, thank you. Didn't do it.
Just amazing. Thinking about financial gaps, I mean, I am wondering, is it something about women just have less money than men generally to save or invest? Or are they specifically choosing not to invest the money they have? What do you think?
It's a bit of a combination of both. So I say sort of historically, one could argue that it was the case that women had less because of the gender pay gap, because women often take time out to be carers, become mothers. And so if women are working for a less period of time and earning less, then, you could say that they have less money at their disposal to actually invest. But if you look at the data and depending on where you go, the stats are indicating that, particularly in the UK, that women's wealth is increasing. Some say that by 2025, 60% of UK wealth is going to be controlled by women, which is absolutely fantastic. But if that money is being saved and not invested, then that's a problem.
Are they saving it, though? Because I do wonder whether women, they spend their disposable cash on things like family holidays. If they have kids, they're spending it on stuff for the kids. It's more of a domestic thing?
I think women do save, and absolutely versus men, women save much more. I think it's because they feel more comfortable with saving, and investing is something that they haven't been exposed to as much. And in some cases, women actually think that when they're saving, they're investing, and that's not the case.
I think there's probably another element to that, which is what we've kind of been conditioned, to believe as the person that holds the family together. You have to be the responsible one. And one of the things that you're thinking is when times are difficult, you need to have a nest egg somewhere. But that nest egg is very much in savings rather than actually you invest,
So you can get at it.
You can get at it. Well, that's so 70s, that's so 80s. Now you have a lot of young professional women that are in jobs. If you look at law, for example, you have, people in their early 20s as lawyers, that qualified at age 23, 25. They are earning six figures.
So thinking about younger women then, if we had a woman who was, say, 27 years old, she's got some spare cash, is she far less likely to invest it than a man in exactly the same position as her, earning exactly the same salary?
Yes, she is. And there are two main reasons for that. So the first one is just looking at the financial industry. It has historically been built by men. Today, the vast majorities of power positions are held by men. And that is reflected in the culture, in the products, in the communication, all of that, which just isn't built for women. So that's a problem in the financial industry. Then just looking at the rest of the world, we live in a world where inequality starts so early. It's very well documented that little girls get less pocket money than little boys, and parents are more likely to talk to their boys about how to build wealth and girls to saving. We go through school, we read literature written by men, we get our first job, we get paid less role models. The media portrays women as spenders and not investors. We even go down to our bank, and it's so well documented that women get different advice. We're more likely to be advised to save rather than invest. So that just means that at every single point in our lives, women are treated differently when it comes to money, and stereotypes around women and money are just enforced everywhere we look. So of course, women are less likely to invest. And the interesting thing is that when they then do invest, they actually get better returns. Yep. Yes, they are better.
I have two daughters, they're lawyers. And it's like, oh, Mom, but it's too difficult. It's too technical. How do we go about it? I think there's a lot to be said, in terms of the education, making it simple.
I want to get into that. But first, actually, I want to go back to that thing that Anna said about less pocket money, because I think that's really interesting. I think there is a sense this all starts really early for girls. Girls, on average, they get 20% less pocket money, don't they, than boys? And I am wondering, does that play into the way we feel about risk? I'm wondering, because, if boys have more cash, they can splash it around, can't they? They can risk it. Whereas if we have less, we need to be cautious.
But I don't think having less money necessarily makes you less likely to take risk. I think it's a confidence gap, because there are so many men who don't have great financial situations who invest anyways. My hypothesis would be that when you look at who invests in crypto or who try to be day traders, there would be a lot more men who have less financial knowledge and they don't make as much money, but they still invest. So I think it just comes down to role modeling, unconscious bias and stereotyping, and women falling victim to that, even though they are brilliant with money once they get the confidence.
Or could it be because men have more time on their hands? they're not,
Potentially.
they're not kind of multitasking because, that's a kind of bias, isn't it?
Because women are doing the
tend to
second shift when they get home.
Yeah.
They're
Could it
doing
be that?
all that stuff.
Potentially. But I think that just going back to the topic of risk, one thing that we say is that women are risk aware versus being risk averse.
Yeah.
And what we mean by that is if you give women information about the risks, about the investments, and they can understand it and make informed decisions, they will still go ahead and invest if something is higher on the risk spectrum. It's more a case of women wanting to have more information. And I say men sometimes would potentially have less information and still sort of jump in.
Yeah, absolutely. And this huge responsibility that I cannot afford to be reckless. If I know that I have, to hold the family together, or I have to make sure that I have a nest egg.
So exploring that idea of that women are prepared to do it as long as they know what they're getting into, and attitudes to risk. Because as you say, data says that women have a lower willingness to take risks than men. It's 82% for women. It's 69% for men. What are good ways to understand risk when we invest? Because I think that is the barrier, isn't it? What are the elements that we need to think about when we're thinking about our risk appetite? Because there are things like age, aren't there?
Absolutely. It's things like age, it's investment time horizon. The longer you can invest or the longer your money can be in an investment, they say typically you can take on more risk because you have the time to sort of withstand any sort of downturns in the market. But one interesting thing that we've looked at, particularly when it comes to women, is what are the main sort of drivers behind what they feel about risk. And we sort of digested it into several key components, but two interesting ones are what we sort of look at as financial risk, so how much you can afford to lose, and then what we call more the sort of psychological risk, how much do you feel comfortable losing. The gap with women between those two things is much greater. So even though women can afford to invest in something and actually take on the risk, they just don't feel comfortable with it. And so they're more likely to go with how they feel rather than what they can actually afford to do.
That's really interesting, isn't it?
Very.
That distinction.
I always say the best thing to try and deal with this is just to start.
Yeah.
If you can actually start investing, even if it's a small amount, and get comfortable with it, as you start to get the documentations through, you can start to read them, become more familiar, and then eventually you can start to invest more and more.
Yeah.
It's about dipping your toe in and experiencing it.
Hi, it's me, Philippa, just interrupting briefly to remind you to click on that subscribe button so you never miss an episode of the Pension Confident podcast. Remember to share, rate and review too, and I'll leave you to enjoy the rest of this month's conversation. Happy listening. Just going back to that thing about women understanding they can afford to lose the money but still not wanting to. I'm intrigued by the motivations there. Is it that we look further down the road in life than men? That we're thinking, well, I don't need it now, but I might need it later? Is it that anxiety? What is that about? Why are we worrying about that more than men?
I think it's because when you save, the idea is that whatever money you put in, you go back at a later date and you get that money back out. It's still there.
And you don't necessarily do that with investing.
Exactly. With investing, you put money into an investment and you're expecting it to grow over time, but equally it could fall. So you're not necessarily going to get back what you put in. And I think it's the comfort levels around that, which is what, potentially skews women more towards savings than investing. It's knowing that, do you know what, it's still going to be here. Yes, it may be less than if I'd invested, but it's still going to be here. And that's what we need to work.
I think that's absolutely right. But there's also what I will put in the category of value proposition. I don't know whether I'm going to make the money. I might lose it, but is that value for me? I should be risking it. Yes, I've got the money, but why would I want to lose that, if I can hold on to it?
So we're more worried about losing it than we are excited about growing it.
Yeah, I think it's still part of this kind of responsibility that you look at yourself and think, is that actually a responsible decision to make when I might lose it, compared to, okay, it's not earning a lot of interest. But to your point, it's there. I can see it.
So obviously, we're not in the business on this podcast of telling women they should risk their money if they don't want to. But we touched on financial education. That's the issue here. I don't want to tell women they need to educate themselves. But I think we do know that if we understand what we're getting into, we're more likely to at least consider it. Would that be fair enough to say? Yeah. So when we think about financial literacy and education, you're all in that business. Yep. What sort of tools are you offering women?
So we've started by offering financial courses that are very comprehensive, that sort of start at very fundamental levels, but that also become more complex. So we want to cater to women who have never invested before, but also those women who may have started, but they have gaps in their knowledge. And we've also built a lot of financial tools and calculators to help make the education more practical. And we see that as a great sort of first step to investing. But what have you guys done?
So we've done a lot of the same. So we use role models. We talk in a language everyone can understand, not on a lower level, just without the jargon.
Clear, yeah.
And then we also make it about more than money, because I think for a lot of women, they aren't necessarily comfortable saying, I want more money or I want to build wealth. So we make it about the freedom. We make it about the independence. We make it fun. We use a lot of humor in our content as well. And I think that has really worked also to engage women who never thought they would be interested in investing. But then suddenly they're drawn in, they feel comfortable. They see so many women who look like them. And before they know it, they have an investment account.
Is that another gender difference then, that women don't want to say, I want to invest to make money? They're thinking, no, but I want to buy this, or I want to do that, or, it's about what you can do with the money rather than the money.
Yeah, we've definitely seen that. And so the way that we've actually built our investment platform is what we call goals-based investing. Because when you ask women why they want to invest, 9 times out of 10, they have very clear goals in mind. I want to be able to buy a house in X years. I want to be able to, I don't know, send my children to university. I want to go part-time in X years and still have the same sort of income. Very, very clear goals. If that can be tied into investing, it makes it much more appealing. That's what we found.
But how do we reach a much wider kind of breadth of women and get them just starting to look at this?
We all play a role when it comes to engaging more women in the world of investing, from the media, who should be using more female experts that you see women talking about money. The banks, financial institutions, they need women in positions of power to shape products, communication, company culture, parents, education system, both primary school but also universities, bank advisors who right now give women different advice. So I think we all play a role.
I think that's absolutely right. And if you look at PensionBee, for example, see the amazing way they've debunked pensions in terms of the colors they use, the simple language that is used, always very kind of inclusive.
Pensions are a great thing to talk about, actually, in this respect, because obviously pensions are investing. But I think perhaps, a lot of people, not just women, they don't think of a pension as an investment, because you know you're going to get something out of a pension, don't you? Because that's kind of the deal. I mean, is that where most women are actually investing, but they don't yet understand or quite understand that they already are investing because they've got a pension?
Absolutely. I think a lot of women who work and are enrolled in workplace pensions are technically investing. But they absolutely, in a lot of cases, don't see it that way. So we work with a lot of corporates. And one of the sort of first questions I always say is, okay, sort of put your hand up if you're saving. Lots of hands go up. Put your hand up if you're investing. A lot of hands come down. Put your hands up if you have a pension. The hands go back up again. So you can see that they don't see it in the same way. But also when it comes to pensions, I still think there's more work that needs to be done, because we found that when we sort of say, okay, do you know where your pension is? Is it in the default option? Is it in something else? How much money do you have in it? Very few people know the answers to those questions.
And the power that you have to actually do good with your money as well, by choosing which sort of pension you want to go for. Because obviously we've talked about impact investing on this podcast before. We've talked about ethical investing, green investing. There's all these choices certainly discussed by women, might be an issue for women. And that's a place, your pension, where you can actually do something actively yourself, can't you, as an investor?
Absolutely. We need to have more women clubs, discussing pensions.
And not just can we do something with our pension, but we absolutely have to do something with our pension as well. So we just wrote a book actually on the topic. And while I was writing this book, I was researching, and what I found was just like shocking. Like I knew things were bad, but it was even worse than I thought. So, I mean, the good thing is that women are much more likely to be change makers when it comes to social impact and environment. That's great. The not so great things is that we aren't represented anywhere in positions of power. The only way that we can influence these decisions is if we start using our money as power, if we start setting demands to the companies we invest in and so on.
Here's another question for you. Is there a sense that investing is just for the rich? Do you think people don't understand you can start really small?
I often say, do you have £1? Well, yes, obviously. Well, then you can invest. And then they sort of give me blank stares. But I think that's the really important point. And I mentioned it earlier. Start small. It doesn't matter if you don't have a lot of money to invest. The beauty of investing is compounding. And what that means is that over a long period, you're getting returns on your returns. And it adds up quite substantially.
So best ways for women to dip their toes in then? Yeah. I mean, you know, if you were just starting, I mean, say you had £10 a month, £20 a month, tops, what would you do with it?
Invested.
Yeah.
Like invested. And if you don't know what to invest in because no one knows what will happen in the future, then just lean on history. And historically, since the first stock was traded more than 400 years ago in the Netherlands, the stock market has always increased in the long run if you have diversified, which means to invest in a lot of different things.
Okay, before we get too carried away, I'm going to talk about things that might trip you up, like fees and charges. So what should women be looking for there?
So fees is absolutely one of the key things to look out for. Now, companies should be making it very transparent and they have an obligation to make sure that they're showing you all the fees that you're going to be charged. But if it's something that you can't find or you're not able to quite easily calculate what you're being charged, then absolutely you have to ask. The numbers might not seem like big differences, but again, over time, it matters.
Well, they work on percentages, don't they? So this can, you know, this stuff ramps up. These are significant sums of money.
Yep.
To add to what you just said, is the fact that if you are selecting your own investments, the fees are cheaper compared to if somebody else is making the selection or managing it for you.
So
It feels quite daunting.
Yeah,
doesn't
it is.
It can, but it really doesn't have to be. There are absolutely some funds out there that are actively managed by fund managers and therefore will have higher fees because there is a team of people somewhere actually making decisions. But there are funds out there such as ETFs, so exchange traded funds, that have significantly lower fees because they're passive funds. So you can still get a wide range of diversification through funds like that, but the fees tend to be quite low. Again, a great place to dip your toe in.
What was the first investment all of you made? I'm very interested to know, Anna.
So my first investment was in a very famous Danish company, one of the biggest ones that we have. And the reason why I invested in that is that I was 19 years old and knew no one in the world of finance or investing. So it was just one of the only companies I kind of heard about when you talk about stocks. So that's what I bought.
What prompted you at 19 to invest? I've got to say, I was not investing at 19.
Me neither.
So I've always been interested in money. So I started working when I was 13, actually. And I've done like every blue-collar job you could imagine, from like sandwiches, kindergarten, selling, whatever. Like I've done it. And that meant that I had actually saved up a decent amount by the time I was 19. I learned about something called interest rate and something called inflation. And that the combination of those two meant that the money I worked so hard to earn was losing value in my bank account. And I just couldn't live with that. So I had to do something. What I did first was actually that I booked a meeting with my bank advisor because I wanted to buy an apartment. Because, you know, you hear about people buying property, and that's kind of what I'd heard about. And she actually agreed to do a meeting with me. And it was like a full hour. She even prepared like a PowerPoint slide deck.
So great.
Of just her going through all of the reasons why I could absolutely not buy an apartment because I didn't have enough money for it. And I just ended up like apologizing, thanking her for her time. And then I went back and I was like, okay, what can I do with less money? And that's how the whole stocks came into the picture.
I love that woman. I'm going to say you were 10 years ahead of me because I didn't get to any of this until much, much later on.
Same with me. I bizarrely found investing quite late, and it's ironic because I was a wealth advisor for quite a long time, so spent my time advising other people how to invest and wasn't doing
You're
any...
kidding me. That's really shocking.
Absolutely shocking. But I think it's something that we touched upon earlier as well. It was just time. My job was incredibly demanding, and then I had a young family, and yes, I know how to invest and I knew how to do it. And it was always, I'm going to do it. And just never got around to it until what I think is far too late. But the good news is I did.
And then, what did you start with?
Well, my knowledge in investing is quite advanced given my job. So I was doing quite risky things.
Okay.
My first investment actually was in a Russian bank, but I bought something called call options. But the most mainstream investments I made were in property. So I went into property.
Residential property or commercial property?
Residential property.
Okay.
So I actually went into residential property and built up a portfolio that was able to give me financial independence. And actually, that's how the idea for Propelle came about, because I got to that position and was sort of like, oh my gosh, other women need this. But I sort of said, I completely appreciate that not all women have deposits, so can go out and do it in the way that I did. So how can we make or make it fractionalized in such a way that women with less money can also invest in property? And eventually we found a way to do it. And the first thing we started to offer was helping women to invest in property type assets from as little as £100. And then Propelle kind of just grew from there into other asset classes as well.
Okay, we're impressed. I'm hoping Lara.
I'm
really hoping Lara started smaller than that.
Well, I started late. Mine was totally safe and secure through workplace, financial advisors, that chose all the stock and everything, which actually, frankly, this was in the kind of sort of early 90s, late, 80s. And they did really, really well, because these sort of stocks, they were going on at the time, and it was privatization, everything was happening.
It's a good time.
Yeah, it was great. And that kind of sort of gave me the confidence, to, and like you, sort of investing in property and then, pension and all that. Yeah. So it's well diversified portfolio.
There's one thing that I would like to say. When I did first start investing, people were sort of like, oh, you've missed the boat, or the market has just gone up. Oh, it's not the right time. You should wait. My view is that if you're going to start investing, which means you should have a long-term time horizon, just start.
What do you mean by long-term time horizon?
For me, anything less than sort of 3 years is not an investment. And in some cases, people say it's 5. So you should have at least a sort of 3 to 5 year time horizon at which you're not expecting to have to use that money.
So we're not talking about quick wins here. It's really clear. So we need to say that.
Oh, absolutely. This is about building long-term wealth and investing over a period of time. So if you need that money for a period of, or within sort of 3 to 5 years, then it's probably not going into your investing pot.
You've got to prepare for the highs and lows because, everything is subject to market movements, and which you don't have a control over.
And you can't predict.
We're running out of time here. I just want to ask, though, it does seem to me that women, we need allies in this, don't we? And I would be interested to know just a quick line from all three of you. What should men be doing to be our allies? What do you want to see from the financial services industry? And what should government be doing? You can have one each. I'm going to start with Anna.
The first thing that men should do is to just sip it and listen. And then listen. I think when groups that we don't belong to describe problems that they're facing that we don't experience ourselves, that we can't relate to, then instead of, defending or reflecting, saying that can't be true, that never happened to me, I wouldn't do that. Just listen. Take it in and then take accountability, not just for yourself, but also for the groups that you belong to. So when you see some of that behavior that you just heard happening, then you step in and you hold other men accountable. But I think the first step, and this is so underrated, is just listening.
Got it. Lara?
For me, I think it's the recognition of this increasing women power in terms of purchases, the decision makers, they have a lot of money, to sort of spend. I think that recognition and then developing product services, to make sure, and the law creating the proper regulatory framework, for women to sort of dip their toes into investing.
Yeah, Ayesha.
And I think it's about the government starting with investing as early as possible in schools, in primary school even.
Education.
Absolutely. Like with my daughter, I teach her about investing. Her tooth fell out the other day and she told her friend that she's going to use the money to put in her investment account. And I was really proud.
How much are you giving her for her teeth?
Remember, it doesn't matter how much you have. It's starting small and just being consistent.
Okay, well, look, I'm going to wrap this up. But finally, if women are not convinced that this is something at least worth looking at, should we end on some numbers? Now, obviously, investments vary enormously. We can't say this too often. But say I had started investing, say, £20 every month, 20 years ago, if I'd invested that money, what might I have now potentially?
So it really depends on your risk tolerance and also the rate of investment. So, I'm going to sort of give an answer, but there are caveats around
Absolutely
it.
understood.
But if you were sort of, say, you're sort of medium risk and you invested it for that period, it could have grown to around sort of potentially £8,000 or thereabouts.
A lot of money. And if you just put it in a savings account, played it safe?
Around sort of 4,800 level.
Okay, so considerably less. And under the mattress?
Well, even
the money might go with the mattress.
even less, because even savings accounts today still give you something. I think the important thing to mention and to think about is inflation. And I think, Anna, you mentioned this before with your own story.
It would have gone backwards.
Exactly.
In terms of what you could buy with it.
We can see money, but we can't see inflation, so we often forget about it. But it's really important to remember that it erodes your money. So you have to make it work for you wherever you can. Have to put your money to work.
Okay, I'm just going to say again, remember those figures we mentioned, they are not guaranteed returns. It is very important to remember investments can go down as well as up. So what we're going to do is we're going to put all that information in the show notes for this episode. You'll find it on your app, and we'll put some links in there for you to check out the calculations for yourself. Thank you very much, everyone. A fantastic discussion. So much to think about.
Thank
Absolutely.
you.
Thank you.
Thanks for having me.
We'll be back next month looking at why it costs so much to rent a home right now, a very hot topic. Finally, just before we go, do remember anything discussed on this podcast should not be regarded as financial advice. When investing, your capital is at risk. Thanks for listening.